welcome to this Tuesday edition of FreightWaves Now. I'm your host Anthony Smith, and coming up we have Donny Gilbert making his return, giving us a broker update. We also have Andrew Cox giving us a shipper update, but first we're going to go to Zach Strickland with a carrier update brought to you by Powerfleet. Stay tuned.
Hey everyone, and welcome to your carrier update presented by Powerfleet. I'm Zach Strickland, and today we're watching the tender rejections for the nation creep up just a little bit, about 6 basis points, going from 5.3 to 5.36%. Now, it's not a huge jump, it's not a big move, nothing to get super excited about, but at the same time, the direction of this is important to look at, especially this time of year. We're waiting on anything to kind of turn up. Now, of course, the coronavirus fears and all of that impact have yet to hit and manifest themselves in the domestic freight market. We're seeing volumes, moving about seasonally where we would expect them this time of year, but capacity itself, we're still waiting for that big supply side correction. It has not materialized yet, but we are going to watch this to see if March should have a little bit of an inclination on what that actually means, especially, as we're waiting on that delayed coronavirus impact from the port volumes and whatnot, which should materialize more prevalently in the month of April. So looking at national capacity, we have our weighted rejection index map here. We did have a big weather event last night that I'm going to touch on a little bit here around Nashville, Tennessee, my hometown. Had a tornado come through the northern part of the city, and it has had a pretty decent impact to the traffic flow there. But also, Denver, Colorado continues to show increasing tender rejection rates and tender volumes. This market has been one of the most active of the last month, driving a lot of the capacity in the nation, giving that a lot of that boosting in the tender rejection rate that we're seeing. A lot of that has originated from the Denver market and areas of the Northwest. Again, weather-related instances in general. So we also earlier in the week had a wreck on I-40 just to the north of the Denver market that has shut down the market. If you look at Nick Austin's weather report here, then you're going to see a little bit more detail in that. But this area has been pummeled by winter storms and winter weather, and it has led to a lot of freight piling up in the Denver market here in the last little bit. Looking at the van outbound tender volume for the Denver market, I've got the outbound tender rejection index and the tender volume index pulled up here, so you can see both of them from about early February on just taking a northward jump, just jumping off the skyscraper here, where you've got tender rejections going, as high as 21%, almost 22%, which is as high as it was around Christmas. So we're looking at Christmas level capacity tightness in the Denver market, not typical this time of year. And then you have these tender volumes. We've got about a 33% increase in outbound tender volumes over the last month or so. So this is pretty big jumps in both capacity tightening and also tender volumes. So this market's going to definitely be one to watch in March. But again, over the next week or so, we're expecting the weather to break up a lot more, and we'll see a lot more ease of entry and exit of the Denver market. I-70 shouldn't have as much snow hitting it here over the next week to 2 weeks or so, and temperatures are expected to warm up. Now, the Nashville, Tennessee market. Obviously, we had this tornado come through the northern section of Nashville, Tennessee overnight, and it has shut down portions of I-40. So this is going to be anywhere from about Mount Juliet to Lebanon, Tennessee exit. If you are driving out of this market today, heading east, you are going to need to take this, southern route or northern route around it. Traffic will be a little bit more excessive than you would normally anticipate. But you see here this red, the Nashville market has been cooling off over the last week or so in terms of capacity in general. So we don't expect that there's a big freight pile up like there is in Denver. So looking at the outbound tender volume index, you see that volumes have actually plummeted here over the last week or so, so not as much volume coming out of there. We've got a 105.5, but tender rejections as well also coming down. We don't expect that to hold though here over the next day or so. So do expect a little bit more tightness in the Nashville market in the next few days. And that'll do it for today's carrier update.
The comprehensive logistics offerings from Powerfleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with Powerfleet.
Thank you, Zach. Donny Gilbert here, bringing you today's brokerage update. We're going to look at outbound tender volumes today for the national average here, and for the first time in 2020, we have broken the 10,000 mark. We are up now to 10,082.96 points. So back here is where we are at 10,000, and kind of looking here at this red line. The red line is 2019. So you saw it peak here. This is March. March is a stronger month, a lot stronger than January and February. So kind of looking at it, you'll see here over the next few weeks, though, March is still a tough month for the middle part of March. You normally start seeing volumes take off through the second half of March. So we still got a little dip we got to get through, and once we get past the kind of mid-March, we should see volume start taking off and continue to pick up throughout the springtime and into the summer. Now, tender rejection rates, there's still a struggle with tender rejection rates here. We see drive-in tender rejection rates, they drop down but pick back up here over the last few days, but it's only 5.8 or 5.08%. And of course, if you look at my scale here on the right, it's only from 5% to 5.5%. So here, the big decline and the big up, that's only within 0.5%. So still at 5%, meaning that spot market rates are kind of within what's going on with your contractor rates. Now, reefer here, reefer's been bouncing around between 11 and 11.5% here. It picked up here for the end of the month, or the middle of February, dropped back down, but it's been kind of bouncing around that 11 and 11.5%. So we're still above 10%, which is what we want to see. But still, it's kind of weakening from where it's previously been. But overall, reefer is a little bit stronger right now in the spot markets than the drive-in are going on. Now, jumping over to our U.S. maps here, what I want to kind of go over and look at is what do we do to find freight right now? Where are these? How can we pinpoint these markets that are having peaks and where maybe the rates are stronger, the volumes are stronger? And you'll find that in the 1 week change maps here. And what I brought here is a drive-in tender rejection rate with a 1 week change. And I want to look around here, and of course, you're looking for the darker blues, which shows the most increases. And you see down here in Texas, you'll see Texas and either western Oklahoma here is where a lot of the darker blues are. And here's some of the ones to investigate here that I point out. First of all, the El Paso market. It's a border market, so that one I'm interested in here. The Lubbock market, that's a tougher market, so not quite so much. Of course, Denver here showing up in a darker blue, which Zach just talked about, and of course some markets here through the southeast. So these are some ideas that you can get in and start to investigate these markets. I chose El Paso because it being the border market, and when I brought it up here, you see where tender rejection rates have risen in the El Paso market. They are currently at 8.41%. So what's important is seeing the rejection rates actually rising. At 8.41% here, we're above contracted rates, but I don't really get excited until we're about the 10% mark. But what I did notice when I looked at our seasonality changes here is look back at March 11th in 2019. You see between now and March 11th, you see this big jump up to about 12.62% for March 11th in 2019. And you kind of see that here in 2020, we're following the same patterns for tender rejection rates. So this is a market that I really want to watch out for and increase my bids, because carrier rates are increasing right now. And if it follows the same historical pattern as last year, carrier rates will continue to increase in this market. So I want to prepare, and hopefully we'll see the volatility pick up and run into this. If we do the same for reefer as we just did for drive-in, you'll jump over and you'll find the Columbia, South Carolina market. Here I've brought 2 years of seasonality, and again here it dropped down for March 2nd, but you see here in 2018 and 2019 here in green, it drops down a little bit before jumping up as well. In 2018 it jumped to 70%. In 2019 it was up over 30%. We're going to be a lot lower this year, but we still may see a peak in this market. Thank you for everybody watching. This is your broker update for today.
Voices from every corner of the supply chain concerning all modes of transportation. From the world's largest logistics podcast network, this is what the Freight Tech Revolution sounds like. Freightcast presented by FreightWaves. Subscribe now wherever you get your podcasts.
Welcome to Schipper Update. I'm here with Andrew Cox. Andrew, what do you have for us today?
Tony, today I've got the ISM PMI, the Purchasing Managers Index. This is a survey of a lot of manufacturers and their purchasing managers to kind of give you an idea of whether it moves in tandem with the U.S. economy. If this is above 50, typically the U.S. economy is growing. If it's below 50, the manufacturing sector of the U.S. economy and typically the economy as a whole is in contraction mode. So after last month, we were sitting we're at 50.9. We slid from that slightly slightly to 50.1, so we've slowed to really like a crawling pace for U.S. expansion of manufacturing. Right. We can jump into some of the components of this. It breaks it down into 10 or 12 different components, PMI being the overall. Then we've got new orders, production, employment, export orders, and imports. So we're already starting to see some of the effects of the coronavirus on shippers from the input side. We haven't quite seen it on the demand side, but from the input side, for example, imports is down almost 9% to a really tightening contraction at 42%.
Right, and one of the numbers that's really jumping out to me right now is this new orders number, because that's really indicative of future production coming online. And so seeing that below 50 is kind of telling me that there's going to be some headwinds for the PMI. Yeah, luckily this is the first month that it's been negative. It's a new trend. It was positive slightly last month. You know, the PMI overall was negative for most of last year. It just went positive in January. So I don't think we had this kind of recovery story building where we might have seen a bottoming in our manufacturing, but I do think the coronavirus is kind of throwing a wrench into that easy recovery story. Right. You know, we're already having input problems. We're likely going to have some demand problems if this virus becomes widespread and we have quarantines across the U.S. Gotcha. And so this is definitely something that's going to really highlight some of the headwinds. And as you mentioned, this is a survey that goes out on a month-to-month basis, and so really it has a lot of forward-looking implications. So it's really telling for the coming months of manufacturing production. And so when we're looking at this, it's really a close relationship when we compare things like industrial production compared to the PMI. Right. And what we've seen so far is that there hasn't been tangible results just yet for industrial production, but there is some. I see this green number here, the overall, as you mentioned, there is some light at the end of the tunnel potentially in the coming months, maybe by the end of second quarter going into the second half? Yeah, this coronavirus outbreak will likely be short-lived. I don't think this is going to throw, you know, a total wrench into the U.S. recovery or into the U.S. manufacturing recovery story. We're going to have some. We're already having some input problems. We're going to have some demand problems. It could get worse if the virus becomes widespread. You think of Amazon, for example. They said they're 800,000 employees. They've restricted their travel to only essential travel for business. So, you know, this is going to happen more and more often, and it's just a matter of time before an Amazon employee gets it and they have to shut down whole factories. So there will be some demand issues of these. But yes, I think there is going to be a recovery story in the next few months, especially when you know, all the goods come in from China and we get back into the middle of the summer. Sure, so definitely potentially maybe a ramp up, so to speak, when we're starting to see some of that activity come back online. Yeah, I'd say so. Definitely. Well, Andrew, thank you so much. And if I'm not mistaken, your team does a lot of research on this stuff, right? So you just put out a piece? We do, yeah. We just actually put out a piece yesterday on the coronavirus, an update, kind of its impact to financial markets, its impact to the freight markets. It's available on Passport Research, so you can go on FreightWaves.com and find Passport, and you can find it there. Awesome. Andrew, thank you so much. I appreciate it. And thank you so much for tuning in. That's going to do for the Schipper update, and that's also going to do for this episode of FreightWaves Now. The content doesn't stop here. As Andrew mentioned, if you're looking for a little bit more deeper insights, check out our Passport program, where you get our deep dives on the latest industry trends, and you get access to our world-class industry events. Thank you so much for tuning in, and we'll see you on the next episode.